SPACs have been on a tear in 2020 as over 110 SPACs have IPO'd to date, compared to 59 in 2019 and only 20 SPACs in 2015, 5 years ago. We've seen returns on SPAC business combinations anywhere between 50 to 700%. However, while the upside for SPACs is significant, such as with DraftKings, which has seen almost a 5x return since going public, the risks are significant as well. Recently, we saw Nikola fall from their all-time high of $80 to only $19 per share due to allegations of fraud. There is certainly upside to investing in SPACs as well as the downsides. So today, I'm here to tell you guys how to identify the SPACs that have greatest upside as well as lowest downside. Today, I'm gonna do a countdown of 4 key considerations of SPACs that I look into when I invest in them. So at number 4, we want to look at the number of warrants that's tied to each SPAC unit. The reason why warrants are important is because there's a lot of upside to warrants after a SPAC unit splits. For example, as soon as PSTH, a SPAC made by Bill Ackman, split into shares and warrants, the warrants jumped up about 25%. The reason why these warrants are so valuable to investors is because they give investors an opportunity to purchase a stock at a given price even after it's run up significantly. So this way, investors don't have to dedicate a large amount of capital into a position within that SPAC, but rather they can just purchase cheap warrants and then make a decision later on whether they want to exercise those warrants or not. What you want to look out for in terms of warrants is how many warrants come with a SPAC unit. The number of warrants per unit may range from as low as 1/9 to a whole warrant. The more warrants per unit that you get, the better. And number 3, I look into what the SPAC's industry of expertise and interest is. Each SPAC is made up of a team of investors who typically have an area of expertise, and they may even outline what that industry of expertise is in the SPAC's S1 filing with the SEC. For example, Social Capital has created 3 SPACs in which they've indicated that they're interested in combining with a tech company that has a lot of room for growth. They've executed or identified 2 SPACs so far successfully, which is Virgin Galactic as well as Opendoor. However, you have to keep in mind that not all SPACs actually need to combine with an industry that they explicitly state in their S1. An example of this is Graph. They were initially a real estate focused SPAC before they picked up a LiDAR company used for automated driving. At the end of the day, it just depends on where the opportunity is and what the SPAC management team is comfortable in investing. And number 2, a SPAC sponsor that has a history of successful SPAC business combinations is critical for identifying whether a SPAC has high potential. For example, Michael Klein, a successful banker from New York, has created 5 SPACs to date and completed multiple successful business combinations with high potential and high earning companies. He just recently released his Churchill 5 SPAC, which has already gotten a lot of attention because of his success in the past. Similarly, Social Capital, after having finished a successful business combination with Virgin Galactic, went on to identify a hot company like Opendoor, which resulted in Social Capital SPAC running up about 100% of its value. In this case, past success is actually a great indicator of future potential. The number 1 consideration that we want to keep in mind when identifying high potential SPACs is the sponsor. In our opinion, the bigger the sponsor, the better the potential SPAC deal. The reason behind this logic is because businesses are more likely to combine with a SPAC that's led by a successful sponsor than not. Again, I go back to my example of Michael Klein and Social Capital, which is led by Chamath Palihapitiya. Both of these sponsors have huge networks either in the finance realm or Silicon Valley. A company that's interested in going public through a SPAC is more willing to combine with a SPAC that's run by one of these sponsors because they have a network that's valuable even after the company goes public. This is especially critical when there are so many SPACs out there right now that are actively looking for companies to combine with. With more competition from SPACs, you need to make sure that you're investing in an all-star sponsor that's going to garner a lot of attention from various companies, and they're going to make the right decision based on their history of successful investments. I personally think that Pershing Square Tontings Holdings, led by Bill Ackman, is going to be really successful, and it already has run up significantly since its IPO. Bill Ackman, a well-known investor, raised $4 billion for a business combination. So you know, based on his history, that he's likely to have a huge network of companies that he can combine with. And this company is going to be something that other SPACs just can't afford, given that they haven't raised nearly as much money as Pershing Square Tontings Holdings, or PSTH. So these are my 4 key considerations that I look into before I invest in a SPAC. SPACs are very exciting as they're democratizing IPOs so that retail investors can back these all-star big name investors who are basically doing private equity or venture capital deals that you can be a part of. SPACs are likely going to be a vehicle that's here to stay, especially if high quality companies are picked up and there aren't any more issues with companies like Nikola that have had fraud allegations. Due to the recent drawback in the markets, there's a bunch of great SPACs on sale right now. I want to hear from you guys in the comments section below on what SPACs you're invested in, and I'll leave some thoughts and comments as well so that we can all benefit from this new trend in companies going public through a vehicle that allows us all to participate in. Thanks for watching this video, and I'll see you guys next time. If you guys liked our video, don't forget to like, comment, and subscribe. Also, check out our website at www.wx.capital. We have a great subscription service that allows you to get real-time trades as well as market commentary, so you know exactly what's going on with stocks and you know exactly what we're trading and what the next hot stock pick is. See you guys around.